Hello, I'm Reyzar Sabado, and my topic is all about monetary policy. Monetary policy. The primary objective of the BSP's monetary policy is to promote a low and stable inflation conducive to a balanced and sustainable economic growth. So, the BSP's primary objective is to maintain price stability conducive to a balanced and sustainable growth of the economy and employment. What is monetary policy? To manage the supply and cost of money and credit, and to influence overall demand for goods and services, and to attain price stability. We can think of monetary policy as the deposit, BSP as the person who controls deposit, and water as the supply of money in the economy. There is contractionary. When there is too much money in the economy supporting overall demand for goods and services, which in turn increases inflationary pressures, the BSP tightens deposit to reduce the money supplies. This action dampens demand, which could lead to lower inflation. There is higher interest rates, less lending or borrowing, more savings, and less spending. So again, we can think of monetary policy as deposit, BSP as the person who controls deposit, and water as the supply of money in the economy. So here is the expansionary. When there is too little money in the economy, which dampens overall demands for goods and services, the BSP loosens deposit to expand money supply. So, kabaligtaran na lang dun sa nauna kanina, dito, lower interest rates, more lending or borrowing, less savings, and more spending. Next, inflation targeting. The primary objective of the BSP's monetary policy is to promote price stability conducive to a balanced and sustainable growth of the economy. Republic Act 7653. The adoption of inflation targeting framework of monetary policy in January 2022 is aimed at achieving this objective. Targeting is focused mainly on achieving a low and stable inflation, supportive of the economy's growth objective. This approach entails the announcement of an explicit inflation target that the BSP promises to achieve over a given time period. The Development Budget and Coordination Committee or DBCC, isa itong interagency economic planning body together with the BSP, sets the annual inflation targets. Yung government's inflation target is defined in terms of the average year-on-year change in the Consumer Price Index or CPI over the calendar year. So yung BSP, gumagawa siya ng announcement para sa inflation target 2 years in advance. In line with the inflation targeting approach to conduct a monetary policy, so yung DBCC, during its meeting on December 3, 2020, decided to keep the current inflation target at 3.0%, positive negative 1.0 percentage point for 2021 to 2022, and set the inflation target range at 3.0% plus or negative 1.0% for 2023 to 2024. Yung inflation targeting is an approach to monetary policy that involves the use of a publicly announced inflation target na siniset ng government, which the BSP commits to achieve over a 2-year horizon. Promoting price stability is the BSP's main priority. At yung target, yun yung nagsiserve as a guide for the public's expectation about future inflation and allowing them to plan ahead with greater certainty. Next one is the monetary policy decisions. Monetary policy is a set of tools that a nation's central bank has available to promote sustainable economic growth by controlling the overall supply of money that is available to the nation banks, its consumers, and its businesses. The goal is to keep the economy humming along at a rate that is neither too hot nor too cold. The central bank may force up interest rates on borrowing in order to discourage spending or force down interest rates to inspire more borrowing and spending. The Monetary Board decided to maintain the interest rate on the BSP's overnight reverse repurchase or RRP facility at 2.0%. The interest rates on the overnight deposit and lending facilities were likewise kept at 1.5% and 2.5% respectively. So, yung monetary policy decision, ito yung control of the quantity of money available in an economy and the channels by which new money is supplied. By managing the money supply, so yung central bank aims to influence macroeconomic factors including inflation, the rate of consumption, economic growth, and overall liquidity. Next one is the calendars of policy meetings. The Monetary Board holds monetary policy meetings 8 times a year, with meeting intervals of 6 to 8 weeks to deliberate, discuss, and decide on the appropriate monetary policy stance of the BSP in order to keep inflation within the target. So, yung Monetary Board, sila yung nag-aawak sa monetary policy meetings na tuwing 8 times a year na may interval na 6 to 8 weeks para i-deliberate or i-discuss at i-decide yung appropriate monetary policy of the BSP para makip yung inflation within the target. So, ito yung pictures. So, source sa BSP, yung 2021 schedule of monetary policy meetings, inflation report, press conference, and publication of MB highlights. The next one is the highlights of MB meetings on monetary policy. Consistent with the disclosure and reporting mechanisms under the inflation targeting framework, the BSP publishes the highlights of the meetings of the Monetary Board on monetary policy to help the public gauge the BSP's commitment to achieve the inflation target. Next is the open letter to the President. To ensure accountability in cases where the BSP fails to achieve inflation target, the BSP Governor issues an open letter to the President outlining the reasons why actual inflation did not fall within the target, along with the steps that will be taken to bring inflation towards the target. Open letters to the President have been issued on January 16, 2024, January 18, 2025, January 25, 2006, January 19, 2007, January 14, 2008, January 26, 2009, January 28, 2016, January 27, 2017, and January 25, 2019. The BSP was able to achieve its inflation target from 2009 to 2014, 2017, 2019, and 2020. For this reason, no open letters were issued for this period. Para masigurado yung accountability, in case yung BSP is failed to achieve yung inflation target, so yung BSP Governor is mag-i-issue siya ng open letter sa President tungkol sa reasons bakit yung actual inflation did not fall within the target. And yung nga date ng issued ng open letter to the President is nabanggit na kanina. So yung BSP ma-achieve niya lang yung inflation target nabanggit kanina from 2009 to 2014, 2017, 2019, and 2020. Sa reason na ito, walang open letters na may issued for this period. Last is the inflation report. The inflation report is published quarterly as the part of the BSP's transparency mechanism under inflation targeting and to convey to the public the overall thinking and analysis behind the BSP's decision on monetary policy. The headline inflation in the Philippines is to 4.8% in September 2021 from 4.9% in August 2021. This brings the country's average inflation from January to September 2021 at 4.5%. One of the key features of inflation targeting is greater transparency, which means greater disclosure and communication by the BSP of its policy actions and decisions. The objectives of this inflation report are to identify the risks to price stability and discuss their implications for monetary policy, and to document the economic analysis behind the formulations of monetary policy and convey to the public the overall thinking behind the BSP's decision on monetary policy. The broad aim is to make monetary policy easier for the public to understand and enable them to better monitor the BSP's commitment to the inflation target, thereby helping both in anchoring inflation expectations and encouraging informed debate on monetary policy issues. And that's all for my report. Thank you.
BSP Securities Monetary Operation. Monetary operations refers to the implement of monetary policy. Again, gaya nga na nabanggit kanina, monetary policy aims to promote a low and stable inflation that leads to a balanced and sustainable economic growth, whereas the buying and selling of government securities, lending and borrowing against underlying assets as collateral, acceptance of fixed-term deposits, and foreign exchange swap, and other monetary instruments used by the Bangko Sentral to influence the underlying demand and supply conditions for central bank are all examples of monetary operation. Noong June 3, 2016, inimplement ng BSP ang Interest Rate Corridor System or IRC system as a basis or framework para sa pagko-conduct ng monetary operation. RIC is a system for guiding short-term market rates towards the BSP policy interest rate, which is the overnight reverse repurchase rate or RRP rate. So, this IRC system is intended to help ensure na yung money market rate is gumalaw or umikot within a reasonably close range in BSP's policy rate. Sa pamamagitan ng IRC system, mas madaling makakagawa yung BSP ng mga effective policy signals as market rates that closely tracks the policy target rate. IRC consists of a rate na kung saan ang central bank ay nagpapautang sa mga bangko, typically an overnight lending rate, and a rate at which it takes deposit from them na tinatawag naman na deposit rate. In a standard corridor, yung leading rate ay nasa taas at nangunguna sa central bank target or policy rate, creating an upper bound for short-term market rates, while yung deposit rate naman ay nasa baba ng central bank policy rate, resulting to the formation of the lower bound. These are the monetary operations under the interest rate corridor framework. Number 1 is the open market operation. This kind of operation refers to a central bank purchase or sales of government securities in order to expand or extract money in the bank system, influence interest rate. Number 2 is the acceptance of term deposits. From the word itself, acceptance, tumatanggap or nag-aalok ng term deposit ang BSP gaya ng ibang central banks bilang isa sa mga monetary tool na kaya o pwedeng mag-absorb ng liquidity. The word liquidity is the measure of the cash. November 1998, nag-offer ang BSP ng Special Deposit Accounts o SDA sa mga bangko. And later on, nag-expand yung access ng mga pinagkakatiwalaang banks and non-bank financial institution noong April 2007. Number 3, standing liquidity facilities. Dito naman, the BSP offers standing liquidity windows in both lending and deposit para makaprovide and or absorb ng liquidity sa initiative ng counterparty. Moreover, the standing overnight facilities are available on demand to qualified counterparties during BSP business hours. Under the open market operations, we have reverse repurchase or repurchase transaction. In here, bumibili ng government securities yung BSP sa isang bangko with a commitment na ibenta yon pabalik at a specified future date at predetermined rate, resulting in a liquidity expansion. In reverse repurchase operation naman, the BSP likewise serves as a seller of government securities. Another one is the outright purchases and sales of securities. An outright contract involves direct purchase or sales of government securities by the BSP from or to the market for the purpose of increasing and decreasing money supply on a more permanent basis. So, in this kind of transaction, both parties do not commit to reverse the transaction in the future. Meaning, yung nangyayari dito is once na bumili si buyer, if full transfer of ownership ni seller sa buyer yung binili niya without reverse transaction. Next is the foreign exchange swaps, also known as FX swaps. Yung transaction na ito ay isang agreement na pagpapalitan ng pera between two foreign parties. The agreement consists of swapping principal and interest payments of loan of equal value in another currency. So yung isang partido ay manghihiram ng pera sa secondary party while also lending that party ay money. Last one is the issuance of BSP securities. It refers to a negotiable monetary instrument issued by the BSP as part of its structural liquidity management operations. Year 1993, under the Republic Act number 7653, BSP was allowed to issue its own debt securities since it's established, but only during exceptional times when there were extraordinary movements in price level. And in year 2019, the Republic Act number 11211 restored BSP's authority to issue freely negotiable debt securities for regular monetary operations. Under the acceptance of term deposits, we have Term Deposits Facility or TDF. This TDF is Liquidity Absorption Facility na karaniwang ginagamit ng central bank. Of course, for liquidity management. It is tasked to withdraw a large part of structural liquidity surplus mula sa financial system para mailipat ang market rates sa BSP policy rate. It offers 7 days and 28 days term deposits. Auction using variable rate, multiple price tenders. At dahil nga nag-aalis ng pera ang BSP sa system, panandalian namang lilipat yung rate ng money market closer to RRP rate. Under standing liquidity facilities, we have overnight deposit facility that absorb any residual system liquidity para maiwasan na bumaba yung market interest rate, and overnight lending facility that provides collateralized overnight funding to BSP counterparties to clear end-of-day imbalance.
Good day everyone! So we're discussing the price stability, inflation target, and financial stability. Promoting price stability is a usual goal among central banks. There's a price stability when the general price level of goods and services in the country moves at a low and predictable rate, thus preserving the value of your money. Conversely, when prices rise substantially and unpredictably, your money buys fewer goods and services. Here in the Philippines, the Bangko Sentral ng Pilipinas or BSP, the country's monetary authority, is tasked to promote price stability conducive to a balanced and sustainable growth of the economy and employment under the Republic Act 7652. This is the BSP's primary objective, to maintain price stability. This does not mean individual price but the general price level. The sustained increase in this general price level is called inflation. Inflation measures how fast overall prices are rising. There is price stability when inflation is low and stable. That is, when changes in the general price level are minimal. So why is price stability important? Preventing erratic changes in the inflation rate has several benefits. It enables households and firms to make informed decisions on consumption, investment, saving, and production. For example, when prices are low and stable, manufacturers are protected against risks related to the changing cost of raw materials and finished goods, and certainly is lessened than firms can price their products competitively since risks like a sudden rise in the cost of raw materials are reduced. With managed inflation, a higher level of savings and investments is encouraged. Greater productive activities are promoted and job opportunities are increased. This improves the well-being of Filipinos. In particular, price stability also preserves the purchasing power of our money, whereas high inflation causes money to lose its value and reduces its purchasing power significantly. For example, a basket of goods and services costs 100 pesos today. If the inflation rate is 5%, you would have to pay 105 pesos for the basket of goods and services the following year. And if the inflation rate remains at 5% in the next years, you have to pay for almost 128 pesos in 5 years' time for the same basket of goods and services. So when inflation remains high, it means prices are increasing sharply, and when sustained low inflation therefore benefits Filipinos, lives and support economic growth. So what is financial stability? To understand financial stability, we must first understand its objective, to have a financial system that meets the needs of the public. Financial stability requires the financial system that can manage distractions. Having that system will allow everyone to go about their business both in good times and in bad. With the stable financial system, disruptions do not get amplified and have a negative effect on the rest of the economy. So why should we care? The point of financial stability is that to preserve the health of financial system. This is an additional concern or the well-being of financial consumers or the health of financial institutions. For consumers and corporations, a properly functioning financial market is an absolutely necessity. They rely on the financial market to bridge where they are today with their economic aspirations of tomorrow. Consumers use the financial system to store savings which can later on be used to acquire financial assets as well as real properties. Through the financial markets, we can avail of house and loans, car loans, or credit card services. We can now pay our bills online, transfer funds to family and friends and other beneficiaries. Corporations will find it difficult to operate their business without a well-functioning financial system. They need to raise large amount of funds through loans or securities. Like consumers, they can also transfer funds or settle their applications but in amount that quite large. On the other hand, financial authorities are accountable to consumers and corporations to the quality and the health of the financial markets. After all, financial stability is as much about enhancing the welfare of financing market stakeholders as it is about avoiding the cost of its stability. Why should we pursue financial stability? Because the lesson from the GFC crisis is not only the crisis caused significant dislocations, because they always do. The bigger lessons is that the financial system that's not yet healthy by itself because we need to take care of it. Because there are risks too and by the system. These risks would be called systemic risks, which will be discussed with the next reporter. Thank you.
Let's talk about systemic risk management. So these are the topics under the systemic risk management, macroprudential framework, institutional arrangements, and recent initiatives. The promotion of financial stability is a formal mandate that is uniquely ascribed to the Bangko Sentral ng Pilipinas. This is provided for in the amended BSP Charter, the Republic Act No. 11211, which was signed by President Duterte in February 2019. So yung objective ng financial stability is ma-enhance yung pagkaka-recover ng mas mabilis sa mga difficulties na haharapin or hinaharap kaya nagkaroon ng systemic risk management. Since systemic risk can take down all parts of an economy, financial risk managers can access regulatory tools and legally binding recourse to manage threats within an economy. Nagpo-provide din siya ng mga ways for organizational development na pwedeng magamit upang maiwasan ang pagbagsak ng ekonomiya at kahit na may mga pagkakataon na magkaroon ulit o maranasan natin ulit ay malulutasan natin agad. Macroprudential framework. The term financial stability took an specific context as a result of the GFC. It is now specifically understood to mean as addressing the buildup of systemic risk, which in turn is defined as disruptions to the financial system that can adversely affect the real economy. The macroprudential policy is the means for mitigating this systemic risk. So, the goal of the macroprudential policy is to lessen the situation, to lessen the damage of the situation. Macroprudential policy does not take anything away from the scope and focus of other policy objectives. Instead, it adds a new policy consideration for financial authorities which was overlooked until the emergence of the GFC. As various studies or publications from financial authorities and multilateral institutions have repeatedly emphasized the monetary policy and banking supervisions on their own are unable to achieve financial stability as it is now defined. As a guide, the BSP and the Financial Stability Coordination Council have adopted the following definition of financial stability. The financial stability is the state when prospective systemic risks are mitigated so as to allow financial consumers, both individuals and corporate entities, to pursue viable economic goals while avoiding disruptions to the smooth functioning of the financial system that can negatively affect the rest of the economy. Kasi diba yung financial stability, kumbaga, piniprevent niya or inaalis niya yung mga financial imbalances na pwedeng maging problema in the future na hindi naman natin inaasahan talaga. So, piniprevent ng financial stability yung disruption na mangyayari, yung mga drastic or damage na mangyayari sa sa economy. Effectively, managing systemic risk is shared by different stakeholders. Yung objective ng financial stability ay mag-set ng plans o process para ma-ensure yung magandang flow ng organization. So, these are the members of Financial Stability Policy Committee of the BSP. So, the Monetary Board approved the creation of the FSPC or the Financial Stability Policy Committee to oversee and decide on the financial stability initiatives of the BSP. So these are the members of the Financial Stability Coordination Council, were the principals from the BSP, the Department of Finance, the Securities and Exchange Commission, the Insurance Commission, and the Philippine Deposit Insurance Corporation. They come together here quarterly. So these meetings provide the venue to assess possible systemic risk and to decide appropriate macroprudential policy interventions. Next is the Office of Systemic Risk Management. In January 2017, the BSP created the Office of Systemic Risk Management as the designated financial stability unit of the BSP. Due to the uniqueness of its policy focus, Office of Systemic Risk Management reports directly to the BSP Governor. It also serves as the technical and administrative secretariat of both the FSPC and the FSCC, while supporting the Governor in the Regional Consultative Group for Asia of the Financial Stability Board, or the FSB-RCGA. Office of Systemic Risk Management is led by BSP Assistant Governor Dr. Johnny No E. Rovalo. So, yung FSPC and the FSCC are under the local, and the FSB-RCGA and the FS Network are under the regional area. Next is the Regional Consultative Group for Asia of the Financial Stability Board. The BSP Governor Benjamin Jokno is the current co-chair of FSB-RCGA, serving a 2-year term until June 30, 2021. The FSB is an international institution that recommends risk and prudential standards for the financial markets. Deputy Governor Shri B.P. Kanungo of the Reserve Bank of India co-chairs the FSB-RCGA. The Financial Stability Network. The FS Network launched on January 21, 2019. The FS Network is a venue to raise awareness on financial stability issues and a means for facilitating an active exchange of knowledge, insights, information, and experiences among members in their respective pursuit of financial stability. Communication inquiries are often coursed through OSRM, which serves as the central point of contact for the network. Alternatively, the Office of Systemic Risk Management provides the means to bilaterally connect members. The recent initiatives. The BSP has been focusing on financial stability since mid-2009, but in this journey, the most notable development have arguably happened more recently. So in this part, pinakita ko na lang yung 2 pages ng statement on the state of financial stability. Pero magpo-provide din ako in the next slide ng mga links or mga relative documents na pwede nyo ma-search sa BSP or pwede nyo na rin na i-search na lang mismo sa site ng BSP.
Financial supervision is mainly responsible for the regulation of banks and other BSP-supervised financial institutions. Financial Supervision Sector. Office of the Deputy Governor. The Deputy Governor of Financial Supervision, Chuchi G. Ponacher. Next is Sectoral Operational Management Department. In this department, implements internal rules, regulation, and policy of the BSP involving personnel, administrations, employees, service, learning service, budget administration, and property and supplies management. Next is Policy and Specialized Supervision Subsector. The first is Supervisory Policy and Research Department. In this department, develop policy through the use of quantitative model, research, and analytical tools for the financial system, surveillance, and batching supervision. The second is Department of Supervisory Analytics. In this department, design and implement strategies, processes, and procedures that enable the financial supervision sector and BSP to govern, acquire, manage, store, provide. And the third is Financial System Integrity Department. In this department, to ensure that BSFIs comply with anti-money laundering or AML and combating the financing of terrorist financing risk management system. Next is Treasury and Asset Management Supervision Department. In this last department, conducts effective on-site and off-site supervision of BSFIs, particularly their capital market activities, treasury, fund management, and investment management activities. The next is Financial Supervision Subsector 1. Financial Supervision Department Department 1 to 3. In this department, sila yung in charge sa on-site examination of like Universal Bank, Commercial Bank, Foreign Bank, Thrift Bank, Cooperative Bank, and Rural Bank. Next is Financial Subsector 3. Financial Supervision Department 7 to 8, also in charge of on-site examination like Universal Bank, Commercial Bank, Foreign Bank, and Government Bank. and also maintain the institutional overview. Next is Financial Supervision Department 9. In this Department 9, conduct spot checking of pawn shop and money charge to determine compliance and also monitor and supervises non-banking financial institution. Next is the last is Financial Technology Subsector. Payment System Oversight Department. In this department, issue policies and regulation relevant to National Payment System or NPS, and to ensure that BFSIs that other participants in the payment system and applicable international standard technology. Next is Technology Risk and Innovation Supervision Department. This department promotes digital innovation in financial service industry through active engagement with fintech players and to ensure and safe and sound the cybersecurity environment for the Philippine financial service industry.